A warm welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take the business top stories. Glad to have you back. Now we go to the stock market to give you highlights of the stock trading as it went down on Monday on the floor of the Nigerian stock market. The market closed in the negative territory, 0.06%. It ended yesterday to close at 66,876.92 basis points. There, that is the all-share index. The volume of trade 314.619 million, value at 4.388 billion naira in a days of 6,133 exchange hands among investors. Yesterday, the market cap lost about 1 billion yesterday at the close of the market. Let's look at the top gaining equities. Thomas Watt topped the gaining table again today, 9.92% to close at 3.99 naira per share. Go down to Academy Press, 9.71% to close at 1.92 naira per share. Talking about Ikeja Hotels, also on the positive side yesterday, 9.52% there to close at 3.45 naira per share. Let's look at the losing equities. Of course, VFD Group yesterday was down 9.99% there to close at 242 naira and 40 kobo per share. Mark Nichols also on the negative side, 9.68% there to close at 56 kobo per share. And of course, UPL also closing negative 9.32% to close at 2 naira and 14 kobo per shares. Let's look at the top trading equities by volume, all of them in the banking sector. The UBA 47.2 million volume of shares of that company were traded yesterday. Access Bank Holdings 40.3 million volume of shares, and of course FCMB Group 29.1 million volume of shares of the shares were actually traded yesterday by investors of that company. Let's look at the sectorial performance. The banking sector is also there very strongly there, 0.44% positive. The industrial sector flat, same as it were yesterday. The consumer goods also going down again yesterday, though marginally 0.30% compared to yesterday. That was way close to 1%. And the oil and gas sector is also on the flat side. Not much activities in that sector or in that segment of the market. In insurance sector, 0.68%. It went down yesterday. Let's look at the rest of Africa and see how they are doing. In Joburg is a 0.14% positive. In Ghana is flat again yesterday as it were on Friday. Let's look at the Nairobi. Nairobi is down 0.5%, and the all-share index, it was close to 100 basis points before, now is down to 92.58 basis points there. These are the highlights of the market as it went down yesterday across the continent. Now, let's talk to Jamiu Mohammed, a stockbroker and, of course, head of capital market at APT Securities and Funds Limited. He joins me virtually from Lagos. Good morning, Jamiu.
Good morning, Yusuf.
Yes, nice to have you on the show again. Give us the sense of what transpired yesterday on the floor of the Nigerian stock market. Many were thinking that the market will react positively to the P&ID judgments that went in favor of Nigeria yesterday.
Yes, thank you. It's a pleasure to be here on the program. The news about PID news came to the market, start the market have closed for the day. Though what's happening in the market is not far from what is expected. We are expecting market to trade in that line. Market loss for opening day of the week, and it's not far from what we have been witnessing for a long period of time ago. You know, the market react mostly to market and economics news. The information is something to have affected the market, but as we speak, the market is yet to react positively to that. And I don't think that reaction, that judgment is going to have too much effect on our market. Though it's a good news, and we congratulate Nigeria and the president on that news that has just come out. But investors are looking at something else, while the news is trying to attend to something else entirely.
All right, Mr. Jamiu, let's look at how the market may likely close today. And of course, you also give us the current data and how you expect the market to close at the end of today. Are we going to see another negative ending today?
Maybe the news that you even talked about is something that is going to affect the market today. Maybe, but as we speak, the market is still in the green. It's in the green right now. Market has green is 0.15% as we speak. If you look at the activity in the market today, market has traded around 900 billion this morning, and the market is still in the green by 0.15%. That is 0.15%. And the volume has traded so far, we have traded around 34 million units of stocks, worth about 904 million naira. As we speak, we have 9 gainers, we have 10 gainers against 4 losers. And the leader in the gainer chart, we have Tomaswi, we have Champs, we have Dangote Sugar. And the loser chart, we have stock like Active Briscoe, FIFD Group, and NGX Group. If you look at the volume analysis, what has been traded this morning, stocks like Geregu has traded 217 million this morning worth of stock this morning. We have UBA has traded 33 million worth of stock this morning, and also we have FIFD Group trading about 127 worth of stock this morning. If you look at these stocks, they constitute about almost 50% of what has been traded this morning in the market. So looking at what the market may likely close at, we're not even looking at the news of that PID to affect the market. We are expecting that the good news of the president that came out to say that we are expecting the inflow about $10 billion, and this is to use to settle some of the backlog in the FX market. If this thing can be done, I think it's a good information, and we believe the market is going to react positively to that. We are now expecting very soon the foreign investor to partake in the market, because the foreign investor actually have the issue as regards to the illiquidity around the FX market, and that is why we have not been seeing them for a long period of time. So, but the information alone is a good news, but it is anticipatory, and we are thinking that we are pessimistic about that, looking at the kind of president we have as a business-friendly president that we think he is. So we believe that statement should not be a friction, or should not be something that is not true. But I want to believe and rely on that information. If that can be relied on, we believe markets should continue to sweep in the green direction. Don't forget the fact that the market is in the listing. I mean, the earnings seasons, third quarter, we'll be receiving results from listed companies. We have received from about 3 of them. We have UCAP, we have Unilever, and we have one other company that I cannot remember as we speak. But as we speak, the market is still good, and we believe that the market is going to grow higher than this current price.
All right, Jami Mohammed, stock broker and of course head of capital market at APT Securities and Fund. I must thank you for your time on Business Daily. We appreciate that insight.
Thank you. It's a pleasure to be here.
All right, we'll take a very quick break. When we come back, we'll go into our discussion. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Now we go into our discussion and we're looking at Nigeria fiscal expenditure. Of course, looking at the issue around the revenue generation budget cycle and of course the budget report that put 36 state IGR at 12 that grew at about 12.9% to 1.82 trillion in 2022. These are some of the highlights of the discussion. We'll see how we can break it down this morning. I have joining me from Lagos, Enebi Opaluwa. Enebi Opaluwa is a senior researcher and policy analyst at Budget. Good morning, Mr. Enebi.
Good morning, Akogu. Thanks for having me on your show.
All right, it's a pleasure. Let's look at this report. The report did show that states still rely so much on federal allocation from the government. It shows that our states can really not stand on their own. Is it a sign of a weak economy or a lack of capacity by some of the states?
Well, I think it's a little bit of both for in terms of capacity and let's say political will. So we've experienced a situation over the years where states do not have enough revenue to take care of their own expenditure, their own expenses. There are several states that do not have enough revenue for their own personnel costs. If you look at our report, about 32 states depend on the federal government for at least half of the total revenue they get. And if you look at, if you check a bit further, about 16 states depend on the federal government for 70% of their total revenue. So when you look at the way these states generate revenue and how they spend, you realize it's not sustainable. And without federal government support, they cannot stand on their own. Can you hear me clearly?
Go ahead, go ahead.
All right. So if without external support, they cannot stand on their own, they run a lot of expenses that their own resources cannot support. And that is why we come up with reports like this, so that perhaps states can begin to reimagine how they handle their fiscal sustainability going forward.
All right, interesting there. Talking about fiscal sustainability, break it down for us. The pillars upon which this your report is based on, can you break them down for us?
All right. So we have about 4, 5 pillars that we use for the assessment. The first is your internal generated revenue, IGR. We assess this based on the volume of IGR they can generate and how that IGR can cater to their recurrent expenditure, their operating expenses, basically overheads, salaries and pensions, and interest on loan repayments. That's the first indicator. Then the second indicator is how well states are able to grow IGR. It's not just enough to make IGR, you have to be progressive. And so we measure your progress year on year and see if you are able to grow your IGR. I think this year about 16 states were able to grow their IGR, while the remaining were not able to grow. They actually retrogressed in terms of IGR generation. And then we now look at your sustainability in terms of debt. How much debt have you accrued as a state, and how has that affected your revenue and your expenditure? So we look at your debt to GDP as a state, debt to revenue, debt service to revenue. All right, those and debts to personnel cost ratios. Those are the factors we use in computing your debt sustainability as a state. And then we also look at your spending priority in terms of recurrent and capital expenditure. Why we look at capital expenditure? Because capital expenses is a very easy way to democratize public funds. So when you spend on infrastructure, on health, on education, you have a way that it's a better route to distributing the wealth of the population evenly and more fairly across every cadre of society. And then when we look at your spending priority and how much you have put on capital and infrastructure projects, then that also contributes to your assessment. Now, if you prioritize recurrent expenditure, it means you spend more on, in quotes, consumption, on salaries, on overheads. Basically, you just consume and you have little to spend on long-lasting infrastructure projects that can transcend generations of society and contribute to economic development and growth for that state. So those are the major pillars with which we use in assessing the sustainability of all the states.
All right, looking at sustainability of all the states, there are states that are not really, business friendly. The ease of doing business in those states are not really anything to actually, talk about. Is this part of the reasons why some states that are volatile, that have security issues, are having low internally generated revenue?
Well, you cannot deny the fact that security or insecurity would have an effect on businesses. If you look at Nigeria's capital importation, you realize that states in the southern part of the country attract more of the foreign investment. In fact, Lagos attracts more than half. And if you look at the trajectory of capital importation over the years, it has been dwindling as insecurity increases, capital importation reduces. And right now, Nigeria is finding it difficult to attract and keep foreign investment. This year, in our second quarter, I'm not sure we're able to attract any capital for capital importation, maybe perhaps only in Lagos. And even in the oil and gas industry, we've not attracted any foreign investment, I think, this year alone. So, yeah, definitely security has an effect, and not just on business, on social welfare. We had cases in the north, some parts of the north, where primary healthcare centers were burnt down by terrorists for whatever reason. Perhaps maybe they don't need healthcare. I can't really say. But we have a case where at least a state 67 primary healthcare centers were burnt. Now, if you look at this year's State of State report, it focuses on healthcare provision and healthcare accessibility. So this creates a problem for states that are already disadvantaged, have had to reach locations, and then the little efforts that are being made to extend government health care are being thwarted by insurgents and terrorists. Apart from that, apart from the loss of infrastructure, you find that even health personnel are reluctant to go to these places to provide health care for Nigerians and for citizens of these states. So definitely, insecurity contributes to the inability of some of these states to generate revenue, at least from those regions. For example, if you look at the data we use for the health analysis, in Borno State, only 7 local governments were accessible for that data. The rest were inaccessible. That means you can also not, you find it difficult to generate economic activity or tax businesses if they are even taxable in those regions as well. So definitely insecurity has an effect on revenue. But apart from that, there's also the state capability, how you are able to deploy technology to increase your efficiency of revenue collection. A lot of states still depend on old, obsolete methods, paper methods, or revenue generation. Apart from the fact that this is inefficient, it's also prone to sabotage and leakages. And this eventually also reduces the total revenue that these states can realize and creates a lot of room for evading of revenue and sabotage. So these are some of the issues that we feel the states can begin to look at and begin to improve their revenue capacity. We've had states in the past that have done well, that have taken some steps. We have people like states like Kaduna that have transformed their revenue capacity in 4 to 8 years. It's not where they ought to be, but we can see the needle is moving. We have states in the southeast as well that are beginning to change the narrative in terms of revenue generation. We have some other states in the northeast and then the north central that are also trying to tweak the system so as they can improve their revenue generating capacity. And on the overall, I should say that since 2020, we've experienced an increase in IGR generation more generally. Yeah, so states are beginning to come up to the game in terms of revenue generation so that they can tax better, tax more efficiently. However, they need to do more so that they can be much more fiscally sustainable and depend less on FAC allocation.
Interesting, depending less on federal allocations, just like coming to Abuja, cap in hand to wait for the federal government. Let's look at a state like Lagos, that his IGR for just a year is more than that of about 25 states of the Fed put together. That is a huge difference. What do you think Lagos State is doing that the rest of the states are not doing? Or what position them in that strategic location that they are earning so much revenue that the rest of the states can't?
I think Lagos enjoys a mix of advantages from geographical location. I also say some form of intellectual prowess that the state government has been able to deploy over time, not just in the last 1 year, but they've been able to be additive in terms of the reforms and how they are able to collect their taxes. And then there's also the benefit of legacy. Lagos was the former state the former capital of the country, and so a lot of infrastructure was already invested in Lagos. We have the seaports, we have airports, so we have road infrastructure that already contributes to Lagos's ability to generate revenue. All right, so that is one. There's a legacy from the past that already make Lagos advantage or more advantage than other states. Because if you check, Lagos is not the only coastal city. Delta has ports, Rivers has ports, but what sets Lagos apart? So there's this element of legacy that Lagos has. But however, if you take it further, we've seen the Lagos state government from 1999. They've been progressive in terms of how they tax, how they collect taxes, and that is a major source of revenue for the Lagos state government. And then they're also intentional about road taxes, although that is also open to a lot of leakages as well due to the processes in collecting road taxes. But they are also one of the most efficient states when it comes to collecting road taxes, income taxes, and other taxes. In fact, if you live in Lagos or you do business in Lagos, you will always see someone who's collecting revenue. The issue now is if we are multiple taxing Lagosians, and which is not just unique to Lagos, it's a problem across the country. But that's not a discussion for today. Lagos has been quite efficient in generating or collecting some of their taxes.
All right, Mr. Enebi, just before we wrap up, let's talk about the areas of collaboration now. How can state governments that are not doing well in terms of IGR collaborate with the private sector to drive their revenue? It's a very big issue that some states need to actually do. What do you think?
Yes. So there's a lot of room for collaboration. There are some things that the state government or governments do not necessarily have to do themselves. Some things can be outsourced, whereas there are some things that should not be outsourced for any reason. For example, things that have to do with security, identity, driver's licenses, identity issues, ID cards, state-issued ID cards. These things cannot be outsourced. So the state or the country must maintain that ownership, that prerogative over those processes. But however, there are other processes, other activities that can be outsourced. For example, if you take Lagos State, the waste management process has been outsourced. It's a partnership between the state government and private investors, and that model has been replicated in other states like Oyo, Ogun State. They are beginning to adopt this public-private partnership model in their waste disposal processes, and that is one aspect. There are several other ways that even in Lagos, many of us may be aware, tax collection is also outsourced to the private sector as well. So perhaps that is one of the reasons for the efficiency of collection of Lagos State. But apart from collaborating with the private sector, we are seeing situations where states that observe progress in other states go to those states to learn. Kaduna State government did it. The Kwara State government is doing it. Other state governments are doing the same. They go to these state governments and understudy them and see what gains they've been able to make, and then try to see how those processes can be replicated to their own context. Mind you, it has to be to your own context. You cannot just copy and paste. How those processes can be replicated in their own context and perhaps get some improvement in their states.
All right. Enebi Opaluwa, Senior Research and Policy Analyst at Budget. I must thank you for your contribution on Business Daily today. Quite a whole lot.
Thank you very much for having me.
It's not always our friend. I must appreciate your time.
Thank you very much.
All right. With that is a wrap on the show today. We'll be back again tomorrow. I am Yusuf Akogun.